We're snorting cap rates and shooting up cash flow here at Deal Junkies.
Welcome back to Deal Junkies. We're here without Gabe still, which is our favorite episodes and Gabe's favorite episodes. We're here with Dane, finally back, and my favorite person, Mike, when he's not arguing with me. And we're going to talk about timing the market today and when is the right time to buy.
Are we beyond your married couple episode? Can we actually talk now?
What? No, that was great. Trevor and I are always friends. We don't.
You never arguing.
Neither of us ever actually get mad. We just get irritated. For a moment.
And then you gaslight each other with the irritation.
And then it just goes away.
I love it. Okay.
And we never talk about it.
Yeah. All right. Timing the market.
Is now the right time to buy?
Well, timing. The way I look at timing is timing only matters on the sell side.
I think it also matters on the buy side and the refinance side.
And the hold side.
Not really. That's the only side it doesn't matter on.
Okay. Well, we've got that pinned down.
Your equity matters in two events. 3 events. Your
buy, sell, and refinance.
refi, and sell. Yeah. I think from a buying standpoint, you should always be looking. And you should always be looking for something that can make sense over a period of time with some sustainability based on the deal you put together. So,
doesn't everything make sense, though, on a long enough time horizon? Almost.
As long as it's sustained, that's the word sustainable comes in. Because you can bleed $1,000 a month for 30 years, and then now that math could work, but can you bleed $1,000 a month for 30 years to get there? Yeah. Right. So everything has to be valued in its own vacuum, but from a buy standpoint, you just have the freedom to always do that. You always have the freedom to go be looking at other deals, writing offers, negotiating real estate. You always have the opportunity to be doing that. And if you want to be a deal junkie, you want to be a real estate operator, you should be doing that. Because the more you do that, the more opportunities you stir up. The more opportunities you stir up, the more that you can say no to. The more deals that you say no to, the better your yeses get. So there's no timing when it comes to the acquisition side. It's just always. That is the timing.
So no timing on the buy side. It's always the right time to buy.
Always. And I'm not saying that as a realtor because realtors are lame. I'm saying that as a deal creator. You can always put together a deal in any economic market scenario that makes sense, that has sustainability over a period of time. You can always do that.
ABB, always be buying.
Always be buying.
Okay, so...
But I'm never going to say, well, if you would have bought last year, your interest rate would have been this and your payment would... No, none of that matters on the acquisition side. You buy the best information of the vacuum you have at the time of that vacuum.
Okay, so, but do you time the market when you sell and refinance?
And that's where I think flipping comes into this conversation, is because you do need to be timing the market when it comes to disposition and obtaining your financing. So when do you refinance?
So let's talk about refinancing first and timing.
Well, here's there you go. That's a really good example. So when rates started going down, was it August or September? I was in front of the SRE group and I was like, they'll get worse before they get better. And if you need to get a loan in the next 30 days, lock it now, get it done. If you're going to be more like 3 months or out, just wait and let the market do what it does. So in that period of time, we had a balloon payment, right? So we had a balloon payment. I think it was due August 12th on a DSCR loan. And unfortunately, this is in my old partnership. It's held with him. And so we no longer communicate and make decisions on a regular basis. And so we kind of got up to that due date, but interest rates were coming down. I was like, well, let's pay a point. Let's do a 90-day extension. And then let's evaluate it for what that best period of time is. And at that point, we could get like a 5.75% DSCR with a 3-point buy down. If I were smart and I would have listened to my own advice, I just would have refinanced done and just got it done and out of the brain. But what I wanted to propose to my partner was, well, should we be disposing our assets? Should we think of this refinance in context of the global scenario? As what typical happens with us, we didn't make any decisions, no action was taken, and now we're 3 months later, and now we're coming up against another maturity date.
With worse rates.
Worse rates. And so now it's 3 points to get 6%, Does that make sense?
No, you say maturity every time though.
Maturity.
I know. I just didn't know.
I change it up.
I feel like
change
you
it up
have.
how I do.
I think
do.
I've heard you say both.
I've said maturity and maturity.
Because I would.
Because sometimes I'm mature and sometimes I'm a maturity.
I'm immature.
So now we're in that scenario. It's like, shit, I should have taken my own advice. I should have acted. But because I wanted a global decision, I didn't take
What do you
action
mean
on
by a
that
global decision?
More of, okay, well, in what we were really it was prepayment penalties and should we do these points and this interest rate. So for me, it's like, I'm not going to be in.
You knew you were going to hold it.
Well, that's my whole thing is we own all these assets together and I'm not happy to be your business partner. So should we be disposing these assets right now
versus holding them?
Versus
so
holding
globally,
them.
you didn't know what the business plan was.
Exactly.
So then you didn't know what decision.
If we're going to hold this for 30 years, it's really simple. The biggest prepayment penalty, the long rate, that just makes sense.
Versus if you're going to sell it within 2 years,
and
you don't want that 5, 4, 3, 2, 1.
And so here's where decisions matter. So his was like, well, let's pay the bigger fees. Let's use our cash to get a better rate in the long term. Like, but I don't want to be your partner in the long term. So why do I want to use cash now to get value down the road?
And then you made no decision at all.
And then we made no decision, which happens a lot.
Okay.
And so now we're in a position of, okay, now you have to refinance because you're up against the maturity date and rates aren't as good. So that sucks.
So how do you time the market when refinancing then?
Yeah, that's it. It's maturity dates. So you need to be cognizant of your maturity dates when they're coming
but
up.
that's a forced refinance at that point. I think you got to be watching it because if you have a 10-year balloon, I think you want to be running a model the whole time, right?
That's what I mean.
You know,
yeah.
So like 5 years in, like, oh, rates are now at 4.5. Like, now is the time to do so, possibly.
Yep.
So I think it's just a constant watch of your SREO and seeing what the market's doing.
Yeah. And honestly, I don't know if I should say this on air, but the reason our partnership failed was we did not take advantage of COVID.
Oh, of the low rates, you didn't refi in?
When debt was at its most valuable from an asset standpoint, nothing got refinanced.
Really?
That is insane.
Absolutely.
From a real estate professional, yeah, that's bad.
From a dude who...
Because that wasn't my job.
Loves bonds. Oh, okay.
That wasn't my job.
And it was nothing happened from it. The conversation was there and then no action, or
now we're playing to play.
We were so distracted
doing other things.
Like, I don't want to throw him under the bus. It was in his radar to go down that road and then go get the loans. And
he had
we're
a year and a half to do it too.
That's the problem.
Sounds like
is
throwing him under the bus.
Yeah, we should probably cut all this stuff.
I'm
out.
not. Probably so.
No.
And
that's the problem with being distracted is, okay, yeah, we know we need to do this, but if you're trying to run a brokerage, you're trying to run an events company, and you have 6 staff, and you're trying to go on vacation, and we're in the middle of COVID, and you're trying to be a dad.
Yeah,
like all these
I
things,
get all these things going on. It wasn't priority,
right?
But
it should have been priority.
It should have been, but you guys just thought the window was going to be longer than it was, or
no, I was so distracted
that you weren't.
I didn't care
either.
I didn't care. Because that's the defensive side of the game, and I was playing the offensive
Acquire
side.
More, yeah.
Acquire more.
Okay. So it was just asset management was not there.
Yeah.
You guys would have pulled cash out and increased your cash flow position.
Correct. And then use that cash to buy more real estate and leverage more good debt.
Yeah.
And so we missed a huge opportunity because we just weren't, here's an opportunity of a lifetime. You should avoid all those other opportunity costs, all those other distractions, and go leverage all the debt you can potentially leverage.
Dude, that's wild for the guys who had been building up before then and saw that and took advantage of it. Mm-hmm. They were able to pull all their cash out, increase cash flow position, and just, it's insane.
There was a lawyer who I talked to like right when I got into real estate, and rates were still low but going up, and I was just talking to him about his portfolio, and he said, I'll be honest, this was a great conversation. I actually am not going to sell that asset, and I'm actually not really wanting to be in Oregon, but I refied like 23 properties across Oregon. I live in Texas now. I've got some properties down here, and I'm not going to do anything for at least 7 years, probably 10. He said he refied his entire portfolio on 3.5% debt for 10 years. And he was like, yeah, I mean, I was in an okay position beforehand, but now I just don't have to do anything for a decade. And there's really not going to be a reason for me to do anything, because it was like right when we had the first rate bump. And he was like, I don't think this is stopping anytime soon. I don't think rates are ever getting back down where they were, or at least in the next decade, getting back down where they were. And he just said, yeah, I mean, I kind of got lucky, but that's what I needed to do. And so now I just don't get, I'm not going to play the game anymore. Like,
Yeah, so what you had to do in that scenario was pull that cash out, though. Otherwise, you would have to make decisions sooner because you're just sitting on too much equity even with those good rates.
Yeah, it's your return on equity calculation. And then the other part is that debt loses its value over time based on your leverage ratio, right? So
just because you become under-levered?
Yeah, like low-cost debt at 80% leverage is great, but low-cost debt at 20% leverage has little value because of the value of the equity not being used, or the opportunity cost of the equity not being used. And so now it's timing. It may be a higher rate, but the value you get by liquidating that equity and putting that equity to use is probably significantly greater than the stupid little points you save on whatever debt you have. Here's a really good example. We're working on a subject to you right now. Seller wants 345. They've got 100K in debt. That 100K is 7.5% of debt. It's like, well, shit. I mean, we can go get a $250,000 loan at 6%.
Yeah, but you're trying to arbitrage the equity.
Well, they want to sub 2. They want to sell sub 2. I'm like, well, your debt has no value to it. A, it's not enough leverage, and B, it's too high of a cost.
Yeah, I wouldn't buy that one that way. I would have them carry a portion of equity and then
and get a new note. Yeah, exactly. And so that's what we'll structure it as.
saying.
What's that?
I said, that's what Mike's saying.
Or I maybe would, but just have them carry. Do they need cash out of that deal?
No, they don't want it, but that's what I'm trying to reframe.
They don't want
like,
cash?
Here's actually a better way and a more sustainable way to do it. But if they don't want cash, then that can go to us.
Yeah, you could just have them carry a note in the equity, and then that 7 on 100 doesn't matter.
Yeah, so timing the market, it needs to fit into, you have to look at both the vacuum of the asset you're trying to look at, but also how does that fit into your overall portfolio?
So what should someone do? Just look at their SREO every 6 months and make sure they're...
Yeah, you should always be updating your SREO. And that's one thing I really liked about joining GoBundance is they have the one sheet where it's just, one snapshot of your financial component, and you look at it quarterly. You're supposed to look at it quarterly. And so it just keeps you in fresh. And I actually made this comment the other night. It's like, remember Scrooge McDuck? And he used to dive into his pile of gold. He'd go and they had the diving board at the top. I do that on a regular basis, but it's looking at my bank account. So daily I'm logging into the bank. I'm looking at all the banking accounts. No, I'm just saying that you focus on it, right? So if you focus on what you have, you will know what you have.
Yeah.
Versus me in the past, I don't care. I'm just getting new. I don't care what I have. I just want more.
If you're monitoring and measuring it,
exactly.
You can fix it without doing much work. Yes.
Yeah. And so, that should be your real estate schedule. It's not just your bank accounts. It's just not your liquidity. It's not your personal profit and loss statement. It's what is your real estate schedule? What's your return on equity? That should be an indicator everyone looks at.
Tell me again, when you're looking at return on equity, are you looking just from a cash flow perspective, or are you adding in loan pay down, depreciation, and how are you calculating?
No, on just a yearly, this is my NOI, this is my equity.
You're looking at an NOI perspective. Wait, would that even tell you the information? Are you sure? You're looking at NOI.
Return on equity. That's all I want is what is my net and what's my NOI on my current equity. You can have
after debt?
No, NOI.
No. Your amortization, any debt that you're paying, after debt, correct. Sorry, no, net positive cash flow, not NOI.
So that's my first question. Yes. You're looking at cash flow on
I'm looking at net positive cash flow after debt.
Yes. But you're not accounting for any loan pay down within that. Or
correct. I'm not paying, I don't account for amortization because if your decision is, well, this asset no longer works for me, I'm going to get another asset, you're still going to get more debt and you're going to still have amortization.
So is there a number that you have in mind for a personal perspective where you're like, if I get to this % return low enough, then I'm trading?
No, because you're not looking for a specific number.
Opportunity cost.
You're looking for which asset do I sell?
Yeah.
You're looking for how do I upgrade my portfolio? And the first time this came to my mind was a conference in Las Vegas with the old dinosaurs, the Jack Miller tree, great coaching tree, the Jack Miller tree. And his statement was you should be trading the worst asset in your portfolio. You should trade every year. You should be doing a trade every single year just to upgrade your portfolio.
Yeah, or I'll give you an example because I was doing a call with a guy and this is the perfect example of it. So he had $2 million of free and clear property and he had 120,000-ish of cash flow on it. So he had a 6% return on equity based on how you're measuring it here. and he has there's no reason to only have a 6% with no debt because you're not having all the loan pay down and all that stuff. So he could have got into a $6 million asset now, reset his depreciation schedule on a $6 million asset, had more loan pay down, and had more upside potentially on a value add play, and got a way higher return than just sitting on this. And it was in the same boat of like, well, I have 3%, 4% debt. It's really good debt on this thing. Or no, it was free and clear. He had some properties, but
debt. He had one property.
With debt or something. But it was just like, yeah, it's free and clear, so my cash flow was really high. But I was like,
well, and
look,
I don't fault.
It depends on goal too, right? If you're at the end of your life cycle,
say.
and that's a super low risk situation. So if you're not trying to grow, like I see why. But his goal was to grow wealth still. So I was like, you have this tool right here of $2 million that you're not fully utilizing.
Yeah.
And like even from a depreciation standpoint, like you can go trade that into a $6 to $8 million asset now, and the depreciation on that alone.
$2 million.
The beginning of that conversation was, man, I just stuttered wild. I do that all the time. The start of that conversation was that their goal getting into real estate was to own 10 houses free and clear, though. And so then when they came to you, I think that it was from the lens of, hey, we're on our way to the goal and we're actually pretty close. But now that we're pretty close to our goal, I think we're realizing that it's not our goal anymore. Mm-hmm. And so it's not a fault to them. It's just to say, hey, this lens that you used to look at it from before you had all this equity was that you just wanted the idea of cash flow. But now that you have all this equity and you recognize that it's really not working for you as well as it could be, let's reframe the way that we think about investing. Because originally investing was just own 10 houses with no debt, because that gets us to the end game, which is a really good end game, right? Like you can have a super simple life with plenty of money with 10 houses that are all paid off. But then once they got to that point, they realized it wasn't their end game. And that's where they're at right now. And so it's totally getting rid of that idea of this is how we invest and just resetting to I need to look at apartments. I need to be cool with debt. I need to, at least for now, at least for a period.
Depending on the goal, but yeah, for that specific
it sounds
goal.
like
For that specific goal, yeah.
And it's the spectrum of where you start. So you're talking about someone for 10 years. Now, 10 years later, they need to recalibrate. And what they're going to see is that they planted some trees. Now they have a reforest. They have a forest. Now they're going to calibrate that forest. For them, it's a significantly more valuable forest. So now they need to recalibrate it on a regular basis going forward.
Hey guys, this is Trevor. Do you want to join the Vesta team? Because we're hiring right now. We're looking for a real estate broker in the Portland area who is investment focused. So if you have a real estate license and you own 2 or more rentals, or if you just own 2 or more rentals and want to join the team, there's a link in the description where you can learn more and apply. Check it out.
Does that make sense? And that's kind of just what happened with me as well. Is I built a portfolio, built it, and now you get a point where now you maximize it, and then you start learning these things. And so we understand that by trading, you increase the speed of money. We understand that by increasing the speed of money, we can build wealth through that process. The return on equity component is just the indicator to say this is the asset to sell to create speed of money. Mm-hmm. So rather than just say, "Oh, I'll sell that asset,"
it's not necessarily even sell, but refinance.
It creates, yeah, exactly. It just creates intentionality around what you do and the moves that you make.
And it doesn't know that there might not be one.
There might not be.
I don't have.
Oh yeah.
I don't have one
Mm-hmm.
right now.
Mm-hmm.
There is no asset that I should sell right now.
Yep.
But we got to reevaluate all the time.
Correct.
Because Trevor.
There's actually one you should
Trevor
sell.
brought up selling one the other day, and I was kind of, we were talking about it, and I was like,
Oh, there's 2 we should sell.
yeah,
You're wrong.
Like, that wouldn't.
We got 2 we need to
Oh,
sell. But that's more of a headache because they're headaches.
Well, in sell, 4-letter word, such a bad statement. Like how many problems have we put ourselves in because we weren't willing to sell something?
I did that.
You know what's a good word? Trade. Yeah.
Yeah, but if you cash out, you're not trading, you're selling. Sometimes the cash has value.
I don't think we would. I mean, you sold houses, but we would trade.
Stop talking in the context of you.
Do you want to hear a funny story?
It's gotta be in a
Mike,
vacuum.
Let me tell you the story. So we bought that deal out in Hermiston.
Yeah.
Jaron wants.
Wait, you bought that thing?
Yeah. So we bought 5 houses for
that one.
800 or 900,000 or something like that. We had it priced out and valued at about 1.2 to 1.4 million potentially. So young Jaron, looked.
Did you drop that on Jaron?
No,
No,
dude, he dropped it on us.
He owns.
That's
I
right,
don't
he
know what
bought it,
percentage.
yeah.
So he was going through this. I was like, we can do whatever you want. Like, I don't care.
Yeah.
And he's like, I could go sell this and buy a Lamborghini. And I was like, you could, if we sell it for that and you get all that money. Sure, there's all this money sitting here. And then
Jaron, I hate you.
he's thinking too short term.
Lamborghini.
Yeah, he's thinking too short term on it because I'm like, you could do that. Or you could wait 3 years, we could increase rents and hold that property, and that'll pay for your Lamborghini payment every single month for the rest of your life to own unlimited Lamborghinis.
I got a funny Lamborghini story.
Okay.
Classic. Me too. You start.
When I was a young appraiser, there was a realtor, Randy Palazzo. He's one of the biggest crooks in Portland. He was flipping homes. He was a wholesaler and a flipper. And he was working with a lender that was one of our clients. And so we were doing a lot of the refinances on his properties. Well, one day, and we went to the same athletic club, one day he shows up in a Lamborghini. So his answer on that was, I bought a bunch of penny stocks and the penny. No, he was a fucking wholesaler.
Jordan.
He just made a huge wholesale fee and then bought the Lamborghini, but he wanted to tell people he did it in the stock market because
Why?
he didn't want to be a
Yeah,
wholesaler.
because he didn't want to be the guy.
Yeah, he was known as being an ambulance chaser. And at one point, we were refinancing, doing appraisals on like 3 of his properties. He traded cars with my uncle. I worked for my uncle. He's like, here, let me drive your 4Runner. You drive my Mercedes because I can't pull up in front of my tenants' houses with my Mercedes.
No way. That's
Yeah.
why I drive a Corolla. Because
What's the moral of this story?
I don't know. It was just a funny story about a Lamborghini.
Story. And
Don't-
said that it was on penny stocks. That's
Penny
the
stocks.
funniest part of the story.
Just not admitting.
Yeah,
who you are.
right, dude.
Yeah.
Do you know what's awesome? When I pull up to every property we own and every tenant has a nicer car than me.
That
Yeah.
is a wild.
Dude, I went and visited Derek Sherrill, the ADU guy.
Oh, yeah.
Yeah. And we were going to drive from his one. I met him at a project. We are going to drive to the other one. He's going to go jump in my Jeep. And he's like, oh, yeah. And he's like, how's Max doing? I'm like, I don't have Max. He goes, I can't ride in that thing. We got to ride in my Caravan. So we hopped in his 1982 shithole Caravan. It was awesome.
Derek's awesome.
Derek is amazing. He is as authentic as it gets.
Mhm. I love it. Okay, so when is the right time to sell, and how do you time that?
Yeah. Well, again, how does that chess piece of that property fit into your chessboard is the one component of it. And then what you try and do, the way I look at it, is you create ranges of time. That's what I want to look at. I want to look at chunks in time. And that's why the flipping industry is so relevant to it, or that activity is. I want to look at windows of time and say, okay, if I need to do something here in the next 12, 9, 6 months, where are conditions now and how are they lining up on that 6, 9, 12 month timeline? So if I've got 9 months and we're in September, well, not a great time to go put something on the market. Maybe I should wait till January. So now I'm lining things up based on what these events need to happen. Does that make sense?
Sure.
Yeah. And so then what now kind of components play into all of those things? One is, well, what maturity dates do I have coming up? Well, what kind of return on equity do I have coming up? What kind of purchase opportunities do I have coming up? And how do these pieces of the chessboard potentially relate to those future opportunities? And so you're always, and this is why the real estate schedule is so important, is you need to know what's on your chessboard. And you need to be evaluating your chessboard so you can see how you can use those pieces to move further down.
So are you looking to sell, though, before you have the next property to trade into? Or are you typically finding your trade and then looking at what you should sell to put into that?
It doesn't matter for me. I look at it this way. If I need to sell something, I'll put it on the market. I can find something to buy by the time I need to find something to buy. Typically what's worked for me, though, is I just find something I want to buy, and that acquisition makes more sense if I sell this. And so then I have a conversation that says, hey, I want to buy, I like your terms, let's do it, but I want to sell this first, so can we do it to line it up with this sale? So that's how I've typically done it, but I've also just put stuff on the market and then gone, okay, great, throw it in an escrow account or in a 1031 exchange account and we'll figure it out. I've done that and figured out in 1031, I've done that, and then I've just closed the exchange account and taken the cash. And so you can only make the best next step, the decision on that based on that best next step, and have faith that it's okay if those steps change. And that's where a flexible mind is so valuable. And I think this is one of my superpowers, is I just don't put value in, if something changes, it's an ego statement to have that change make you mad for the decision you made, right? Like, okay, you made a decision, the best decision you can at that time, facts are different, and now you have a different opinion, and now your actions are different. That's not a reflection on your past self. That is a reflection on now. And so it's a strong ego to say, okay, that's fine. Let's make the right decision again. That's been helpful.
So this is an interesting perspective I see a lot of beginners have that I want your take on. Most of them are acquiring all these pieces with the assumption that they will never sell any of them.
I think that's a normal progression of a deal junkie. Because we're taught sell is a 4-letter word.
Mm-hmm.
But once you realize the game and you get in the game, you realize selling is the means to more.
You have pieces now that you can play with.
Yeah. So selling is a fear-based mindset. And until you know and until you learn and you go through these experiences, it's okay to be afraid of selling. But once you sell and you see the beauty of selling, then you realize selling's not a 4-letter word. Selling is liquidation. Liquidity is amazing. Someone asked this on GoBundance the other day, is like, do you count liquidity on your one sheet? And everyone said no. And I was like, well, I mean, it depends on your word of count, but the most valuable thing on my one sheet is my liquidity.
Yeah.
That is, hands down, that is the most valuable thing I have, because that's my sword to go create more value.
Mm-hmm.
So does that make sense? I don't know. That was a rant.
No, I think that's a huge issue that people run into. I mean, that's probably what I didn't get that until 2 years in.
Well, that's the problem of financial statements, right? So liquidity on a financial statement is a net neutral line of credit, right? So it's liquidity, you can use it, but once you use it, it's net neutral. You took the cash out, you have debt, so it's net neutral on your balance sheet until you spend the cash. Okay, so it doesn't show up in your net worth calculation, but again, it's a significant tool to create value.
Sure. Yeah. From the perspective of people getting wound up about never selling, though, or back to that question, I think that it's just what?
Stop playing with that.
I think it's just realizing that as an investor, your goal shouldn't just be to try to hold on to all of your real estate forever.
I really like that, though.
Like,
it's really fun.
No, I love the idea of that too, but it's like if somebody painted me a picture where I owned, 400 units that were 1,000 units that were built in, anywhere from 1900 to 1960. And then somebody said, hey, if you play your cards right, you're going to own 800 units. But they were all built from 1980 to 2024, and you actually built like X number of those. You built 400 of those units with your partnerships because you sold stuff to get into those projects, and then you ended up selling those projects to get into the next project, and that was the one that you could hold. But it took you 3 trades to get to the point where you could hold 100 units of new construction that you had built. And it's like, oh yeah, I like that picture more. And so it's not as much saying like, I just want to sell some of my real estate so I can trade into like whatever it is. It's just conceptualizing like, what do I want my portfolio to look like and why? And it's like, if I'm an old dude, like I want to be the old dude who everybody's like, dude, he just owns like all the new construction stuff. And you only see that picture, but that old guy is the one who owned all the stuff from the 1950s and then was okay trading it in because he had a vision for his portfolio.
Sorry, Mike, you're getting pretty old. Do you want to trade all your stuff and the new stuff in triple net leases? Because you're about at the end of your life cycle, your investment life cycle. Like it's almost over.
I want to start working less hard. But if you're aggressive young, you get the ability to do that.
You're actually in scale mode, though, aren't you?
I'm
right now?
still in scale mode, yeah.
Like you're just getting started, kind of.
I'll say this. What I've experienced is there's this group of old guys in Portland that control a lot of real estate, bought a lot of real estate. And there's one guy that's head and shoulders above everybody because he was that guy. He traded and built and developed. Mm-hmm. I don't have a conversation with that guy's not talking to me.
No.
But I'm talking to all of his friends because all of his friends never built a magnet that brings the buyers that Joe talks to. They were stagnant and they didn't trade, and their magnets are only big enough for guys like me to talk to them. Does that make sense?
No.
If they were like Joe, they would be talking to institutional buyers, and I would not have a seat at their table. Mm-hmm. But they weren't like Joe. They were like themselves, and they were slow, and they didn't like debt, and they didn't like to trade, and they didn't like to do this, and they didn't like to do that. So their magnet is very, very small, and so it only attracts a guy like me. Well, Well, guess what? Institutional buyers pay 4 caps. I don't do that, right? So not only
Well,
is
you just
there,
said you bought 4.5 caps.
I did, but fuck.
Institutional buyers.
I love contradicting myself all the time.
Use bank debt, not seller debt.
Yeah, but anyways, you see what I'm like? Because he lived his life a certain way, he has significantly more options than someone who lived their life in a less aggressive way.
And his name is actually Joe.
Yeah, Joe Weston.
It's not a it's not a John Doe scenario.
It's funny because I used to hear the Weston Kia commercials growing up all the time, and really he's a real estate mogul that bought car lots.
Oh, really?
Mm-hmm.
Oh, I didn't know that.
Mm-hmm.
Oh, that's hilarious.
He built his whole portfolio and
Through
then-
real estate.
What's his story? Or did
You just start buying apartments, value add apartments, and then
just
he
worked
started
his way
buying
up through
land, and
assets.
he land banked, and then storage facilities and office buildings and new
I have
construction.
a question
He
for
was
you.
a contractor, wasn't he?
I don't know that much. I mean, he built a lot of stuff in the
Yeah.
70s and 80s. He built
Yeah.
a ton of apartments
Yeah.
in the same plan, the same shitty construction, same
You know his building.
1970s walk up. Yeah, they have the same siding, the same stupid sign with the crappy name. The cool thing he does is on all of his commercial buildings, he paints a rose on the entire side of a building. That's cool.
That's cool.
Yeah.
Okay, I want to talk about your favorite topic, land banking.
Yeah.
How long do you think you typically have to land bank something before it's developable? Because I see a lot of these projects where I'll go look at it and they'll hold it for like 10. They have like 10-year outlook on it, which is wild.
Yeah, well, and land banking is all about, okay, well, what's the zoning? What's the basis? What's the income stream there? What use are you going to put it to? Where you're at in the cycle? When do you put it to that use? There's so many components that come in. And this is the beauty about land banking is you just make a decision of time, like I'm going to buy it and I don't care. Does that make sense?
as long as it pays for itself, type of
Correct.
thing. You mean?
I think
Because a
it
land
does.
a land bank is not a bank. You don't just park it there. A land bank has an income stream to offset the debt you use to buy that land bank. And so if you get the right debt with the right period of time and it has the right income stream, it doesn't matter when.
Yeah, because I just look at like the title reports and the maps sometimes when we drive by some
Yeah.
of those where I'll see like, oh, they bought this really old 1940s,
Yeah.
triplex or sixplex, and then they built their new construction 12 unit behind it.
Yep.
I'll go look at the map and see when they did. I was like, holy crap, they owned that for 10 years
Yeah.
before. They were planning so far out, or they just picked up enough pieces.
And
it
then the
didn't
buy
matter.
matters too. Like, so I bought a piece of apartment land. It was a car wash. I was going to convert it to a car. It was just going to be a land bank. Because they changed the code, I had to sell it. I 1031 was 200 grand in profit in 6 months. So land bank can be huge equity creation
Don't you have
if
to
you do
get,
it right.
Don't you?
No, because my
you-
intent, I was able to 1031 because my intent was to buy income producing property.
Zoning change.
I thought you had to do
No.
it on 2 tax returns or between 2 years even.
No.
They were 2 different tax returns because
Okay.
one was bought in 1 year and sold in the other. But no, it was it was a 6-month period of time.
Yeah.
It's illegal 1031.
Did you know when you're
It was
selling
an
your
illegal 1031.
It was illegal.
illegal 1031?
But I'll say this about
But I did it.
there are components you want to look for in land banking. Where's government money going? Where is population going? Where is density going? Where are zoning changes going? You want to stay away from industrial zones. You want to have zonings that have the most flexibility to them, which is why you like commercial zones, because you do mixed use commercial. You can do all residential. Industrial doesn't allow residential. Industrial, you need larger sizes. So you want to look at the locations, the sizes, the density requirements. There's a significant, so many more details that come into play that it makes it a much more complicated scenario. But it is simple. It's literally, there's an income stream. I can buy it for this. I can get this debt. That income can pay for that debt and all the expenses are associated with it. And if that debt is long enough, you can put it to a higher and better use down the road and create value doing that. I got to pee so bad.
No, you don't. I got another
Okay.
question. Do you know when you sell your primary residence when you live out there, like 2 of the last 5 years, and you get tax free? Do you know how often you can do that?
No, because I don't use that.
Yeah.
But the way I read it is you can't do it every 2 years. You can only do one every 5 years, right?
It's
Oh, wow.
because my thought was like,
It's
okay,
2 out of the past 5 years, but you can't just like buy one.
yeah, because the plan
use it
like you
2
could buy
years.
4 in a row, right, and then
Yeah.
sell for year 5. Yeah, I learned.
No, because you have to
can't do that.
occupy it for the 2 years.
Or
But
sorry,
beyond
sorry.
that,
yeah,
you
if
can't
did
do 2 in 4 years.
Correct. Well, yes, you can. I learned this because I was selling a bunch of primaries, and I thought I could sell a bunch of them in 1 year, and you cannot. It's every 2. You have to wait like 2 years in between doing it or whatnot. But I just did it anyway. I'll figure that other part out later. Anyway, the last thing I wanted to talk to you about was me and Dane were having this meeting with Jaron, and I want to get your thoughts. So
Oh yeah.
We were trying to figure out, because he's just trying to increase active income through real estate, and he was trying to figure out the best way to like make $60,000 on his next deal for his skill set.
You young kids are so funny.
I'm pretty funny, yeah.
Hey, dude, I'm not. Don't you?
Why do you say that?
Because all you need to,
Dare
you can
throw me
stop
in that
that
boat.
statement as he just wants to make more active income. You don't need to add the word real estate. Okay, so he wants active income. Why does it have to be real estate?
That's what I told him, but he wants to do it this way.
Because he's heard us. He say really smart shit like make money in the industry, so you can be making money in the industry that you want to be in.
How would you think he does it, though? I want to see your take.
Fee build, because that's his skill set. It's his easiest, quickest, good quality skill set to an income stream.
I agree with that.
There's no other way
That's
to
what
do
I
it.
came up
Yeah.
with.
Yeah.
So I came up with 3 ways I thought he could, but it was really bad. I didn't like that I was giving him 3 ways.
He could become a wholesaler. He could become a realtor. He could just fee
So-
build.
Well, the way I thought he does it is $2 million new construction or value add apartment. You take an acquisition fee, you own part of the deal, and go through all that, right? 3% acquisition fee on $2 million, there's $60,000. Or he could do another play like he just did with the land, split, sell off the lot, or take that into the fee build and then sell, right? Or just do a straight fee build or partnership for 10% profit margin on a $600,000 build.
Yeah,
There.
he could do all those things. The problem with the first thing that you suggest is he doesn't have the acquisition skills. He's never once bought his own deal. He's relied on someone to bring him a deal.
Yes.
He's never made a deal.
So
So that's not the quickest way to go get
Okay.
that value. Does that make sense?
yeah, no, I agree.
That's
with
the
that, 'cause
quickest way to create that value, but that isn't in his wheelhouse.
Yeah, he's
of-
reliant upon others to bring that deal.
Correct.
And it will just take a random amount of time out of his control.
Yes, absolutely.
Okay. But you think which way is the best then?
So he can look at it this way. He already has a skill of construction management.
Mm-hmm.
So it's really easy to parlay that already honed skill into a fee build or into those types of projects. A more valuable way to make more active income would be to find a bigger deal to then raise the capital around that, to do the acquisition fee. But now he's needing to create a new skill on the acquisition side in order to do that. And so now it's a longer road to that value. He can do it.
Okay, so you like those 3 work.
Yeah.
The fear I had was giving 3. Dane looks like he's bored out of his mind.
The beauty is you can do all of that at the same time. So he can work on
So that's why
Yeah.
I was like, let's try to do all 3 because I want to push it and see.
yeah.
I
'cause-
wanted to see if our team could.
and he
put it
says
all
he
together.
wants to be obsessed and not average, right?
Yeah.
Like on that recap episode, we talked about obsessed. You can do this and be average. You can do this and be obsessed. So
Dude,
that was a great episode.
that was a good episode. You want to know what the problem is with what you just said and what you just brought back up? Which
Yeah.
I'm not saying you're the problem with what Trevor just said though. Is it is so hard to be obsessed and not average
Yeah.
when you're doing 10 things.
Right.
I cannot even stress I felt so like I was just doing stuff all the time, but I kind of felt lost and like wasn't super motivated when we had 10 business plans.
Obsession
and then the
has
moment, do I?
obsession has significantly more value when it goes deep and not wide.
It has to be pinpointed.
Yeah.
You can't be because then everything that it's like building a concept map in your brain where everything you're doing feeds into the one thing.
Yeah.
And you can connect everything that you're doing every day back into the one thing. And when even if all 3 of those things have to do with real estate and they're all deals that have to do with the thing he already does well, and it's the fact that he's not just pinpointing on one deal. Like, no, right now I am the guy who does the pre-development stuff. I split the lot off. I'm the one who makes money here. It takes 2 years to build that up, but that's all he does. And then if he decides to do that, 10 years from now, he just has deals that are running all of the time. And that's the thing that he knows how to do best. The moment a deal pops on the market, he offers on it. I've told him 4 times this year that there was a deal that he should write an offer on, like the day it hit the market, because it was going to go off the market that day. And then it's sold for either at the list price or over. All 4 of those have. And the point being, when you're not focused, then you see that deal. And then when it goes off the market or it sells and you see the thing that's like, oh, it just closed and it's 20K over. And you knew that morning that you should have bought it. But because you had 3 deal types that you were trying to buy, you didn't offer on it. Then it's not even that like you're disappointed. It's that you're actually willing to work less hard. Because now you have this thing where it's like, well, shoot, like
Not willing the ability to work less hard
Yeah,
because your no becomes easier because your
it's it.
yeses are more
Like,
powerful.
I've got 4 different things that I could be doing, but I'm really not doing anything.
So you think narrow it down to one?
That's what I said. Yeah.
Yeah.
I
but you
think
like
that-
doing all three, Mike. You like the idea of you're looking for these.
Yeah, because they line up together.
They're similar skill sets on a lot of them. You're raising money for them. You're building things. You're doing value add. It's similar.
Either way is
gonna.
so if he just does a fee build, it takes the fundraising portion out of it. It takes the deal finding portion out of it. That's not hard to accomplish. You can accomplish that. It's done.
But
and
you
then
haven't. He hasn't successfully built stuff. He's He's kind of built stuff, not on his own though.
Jaren can. The only thing he hasn't done yet is put in a. Well, he has.
That's
only-
the smallest detail
Okay.
in those in that
Okay.
scenario.
He can.
So okay, but you guys, you still think differently. So you think do all three at once. You think Dane do just one.
I
I
think
think-
I think you should have one deal type that you are buying until you know the moment that deal type pops on the market exactly what you'll buy. That's the only time that you get to say, okay, I can now buy something else.
He really likes a good refined buy box.
I do.
Yeah.
So what
Well,
do you
there's
think
a
you
ton
do
of
in this
value in it.
situation?
Because until you know exactly what you will buy of one specific asset class, you don't buy anything. You have to know, or you do, and it's a bad deal,
See-
and then you lose money, and you don't do, or you do, and you get lucky, and you make money, but you don't actually have a.
He's
strategy.
advocating
no, I
against
agree.
deal junkyism.
No, I agree with Dane, but most of the time, why?
Not.
No.
You are.
I think real deal junkies have a very specific buy box.
It lets you
Gabe
do
is
more.
the biggest deal junkie of us all, and he says no quicker than all of us. Trevor and I will look at a deal way longer than Gabe. Gabe owns the most units here, and Gabe buys the most deals here. He does.
Yeah, but so why I was okay with it in Jaren's case because he's done a couple of these deal types before, so I felt like we could cycle through those quick enough and make decisions while adding a new one in. But I could be wrong. I was hesitant with
The
it.
fee build side is a very small push in my mind. So that shouldn't take a lot of bandwidth off.
Yeah, I think you
And
could
that
do all
allows
three of
room
these at
for
once
other-
too.
Exactly. Yeah.
I don't think that. Sorry.
I do think like what he was talking about going and get a 20 unit value add apartment building, that's a big distraction. That's a big push. That's
Yeah,
probably not your
agreed.
best.
So like a
use of
12
skills.
unit even, no?
Do 4plex, 8plex.
Well, just to collect
How
that,
hard does he have to work to get that done? Does that make sense?
you got to raise 700 grand.
And
Got it.
and maybe the capital raising component is not the hard component of that. What's probably the harder component of that is finding the deal.
Just because the commercial space isn't trading that actively right now.
Exactly.
Yeah.
So the push of effort to go get that deal, it takes a lot more work than it
Okay.
probably makes sense.
So you think you would eliminate that off the table and then do the land flipping play / new construction build for fee?
Yeah, I mean, I would finish the partnership with you, and I would get the fee build portion built into that. There's number one, you accomplished your goal, you got active income in the industry. To actually execute that won't be a lot. It's subcontracting. It's paperwork with some site visits. So he can do that very easily, won't take a lot of time. He just bought the other deal, right? So get that remodel done, get that entitlement done. While he's in those two
So
things,
just keep doing those ones.
yeah, he
Skip
can
the
do
apartment.
Correct. He can do his job. He can do the fee build partnership with you, and he can do that new property he built all at the same time, no problem.
And then add in the same deal type on top
Exactly.
of it. So
now,
don't do the apartment.
adding on the 12 unit on top of that is probably a little bit of an overload. Adding on another one of those same types of deals is not an overload.
Okay, so what do you think about that?
Yeah.
Two deal types though.
What are the two deal types in your mind?
Well, it's the new. It's kind of plays into the same if you're doing the land flipping play with it, but also new construction. Because you could flip, you could do the divide the lot, right?
yeah,
fix up the
but that's
house
the same buy box,
Of-
just
yes.
in the business plan.
a little
earlier.
sooner. Correct. Yeah.
Yeah. Or unless I'm missing something
Okay.
there.
So I like the idea of the apartment too because I was excited, just like deals. But
Yeah, and at some point he will build apartments, right?
well, I was
It's
thinking
like,
even do the value add on it. But so you think just eliminate that portion?
yes, dude. It's like we're
Should have said
doing.
that yesterday. I
we-
already
that's what
thought
I
about this for a while.
said.
You should have said it louder. Anyway,
No,
I think
so
you should listen to Dane more often.
I think the idea and the real reason, not even also to get like back to the idea of having a very specific buy box, isn't even that like I don't think you should do multiple deal types. It's that I'm looking for value add 12 units and I'm looking harder than you because I know exactly what I'll buy, which means Jaren,
He can't
if he's
compete with you.
looking for it, by the time he sees it, everybody who actually would have bought it has already looked at it.
Yeah.
That's why like when we offer on the same deal as Mike in Vancouver, Washington, it's like, why do you think that happened? The same 12plex value add.
I think because Mike was just trying to steal our deal.
No, it's because we know exactly what we're looking for. And we saw, and everybody else was like, "Oh, holy smokes! Like, where was that deal?" And it's like you don't get to see it because all the people who have that deal already brought it to us. They knew that we wanted. They knew exactly
because
what
of all
we
the time
wanted.
and energy you put
Because
to
all
be
the
in that
time and
spot.
energy,
and he has to
same with
recreate
you.
that.
Okay.
Same with you.
I like
and
that.
so that's why you say this is the one thing that I buy. Here is where I will offer at. Here's why. And then everybody's like, "Well, shoot."
Cool. I like that.
And that
I like
could
it.
be a short-term contraction for a period of time, and you
Totally.
expand
to help
after
expand
that.
later. Yeah.
Totally.
Okay. So next part to my question: how do you get through to people who are like, I want all this wealth, I want to work really hard, I want to do all these things verbally, but then their actions are like, I have all this free time and I don't actually spend it to do these things because I don't know what to do.
How do you get through to them?
How do you get through to them? Well, you
It's
get
not
through
your
to them
job.
right
You're
now.
not God. You cut them off.
Yeah, that's my. It just. I mean, it doesn't.
Yeah,
So it's
you
just
don't-
like clearly you don't want it.
Exactly. They're telling you that they don't want it, and
You-
so you
They're
stop-
telling you that they want it, but
Nope.
then
No.
Nope.
Do you
Their
remember
words don't
when-
matter.
Do you
Actions
remember
matter.
when Gabe was like, "Trevor, you need to start working harder so that you can buy more apartments"? Do you remember when Gabe told you that?
no.
Oh, that's because he didn't.
Oh.
Yeah.
You're listening
your-
to words.
your
You're not
mentor
watching
never
their
had to-
actions. Yeah.
Your mentor never had to tell you that.
Mhm.
There was the only person that ever had to tell you to work harder was you. And the only person that you're your biggest critic. And if you're not your biggest critic, then you're never going to be the guy who. And that's
Let's put it this way. Do you want to convince someone over and over again? Just
No.
You want to drop a seed and you want to see someone else water it.
Sure, but they're like, what if someone comes to you and they're like, I want to do all this, and then you see like their actions are, not doing any of these things, and you're like, why aren't you doing this? And then they're like, because I don't know the next step. I'm like, you don't use your free time to figure out the next step, like.
Yeah, you're trying to solve an equation you cannot solve, so it's
I can
not
solve
worth,
it all.
No, you
also
can't.
to clarify here, Trevor's work ethic is pretty through the roof when he's got a lot of free time. And so like somebody saying they want to do a lot and then not doing a lot in Trevor's mind means not accelerating at like 200
I would say
miles
this
an
first:
hour.
evaluate, are they actually taking action? If they are taking action, they're worth pouring a little bit more into. If they're not taking action, you stop pouring.
Yeah. No, that is the idea. And so even if it just because they're not taking action at the speed at which you would take action
That matters.
does not mean that they're. It's like, why are you just sitting around at 6 o'clock on a Saturday afternoon and watching TV? It's like, because it's 6 o'clock on a Saturday afternoon. Like, that's what I do. Mike walks his dogs on Saturdays. Like, we go for runs on Saturdays. Like, whatever you like to do on
Most
Saturday.
Saturdays.
Yeah, but then Trevor will be sitting there like sending me this new spreadsheet he built out at 10 o'clock on a Saturday. And so your frame is that not doing that means you don't care. But it's like, no, I just care about more than a single thing.
Their obsession level's different on
Yeah.
the spectrum.
And it doesn't mean that you shouldn't like believe that they really do want that thing if they're taking action at times during the week.
So it's a difference
that
between
people
wanting
normally
and
work.
acting on it.
No, it's that they're
Everyone wants it.
No, it's
Everyone
the
wants
speed
it.
at which they
There,
act.
there's no shortage for people telling you what they want to do, and that's where you need to decipher their words versus their actions. And people will tell you whether they're actually doing things or nothing. And so again, your highest and best use. Is it better for you to pour your value and time to someone who's going to take your advice and go take massive action and implement it? Or someone who's taking minimal action and implement it, or someone who's taking no action and implementing it? We know the answer to the no action implementing it. You're trying to figure out, should I be working with massive action takers or less action takers? And the more massive action takers you ultimately work with, you just have to cut these people off because they limit the value you provide to the world. But someone that is taking massive action ultimately will give that value to that person. And so if you look at it as a tree, where do you need to be on that tree? It's more clear to where you can put your value.
Cool.
Did that answer your question?
No, that was good. Yeah, I'm with Mike.
Cool.
Oh, good. Yep.
All right. Is that everything you guys want to talk about?
Yeah, that
today?
was nice. No,
Can we
like-
fight? Do we have, I feel like we need to fight over something.
No,
though.
I feel good. Me
Okay.
and Mike, same page.
Yeah.
Trevor, just yelling at Trevor.
This is unique,
That's good.
rare.
That's good.
All right. Well, we're glad to have Dane back.
We are glad
haven't
to have
seen him in
Dane
a
back.
while.
You look
Glad
good,
to be
buddy.
back.
You look healthy.
I think we've all.
Does
lost
his face
weight.
look thinner to
I
you?
think this whole crew of people have
Are you
lost.
on meth?
Not anymore. No.
Does his face look thinner to you? You haven't seen him for a while.
No, it doesn't.
Oh.
Does my face look fatter to you?
No, it doesn't.
Okay.
All right. Well,
Actually, yeah, it does.
All right. Thanks, guys, for listening. Gabe will be back, I think, next week. Maybe not. But we'll see you guys soon. Share the podcast if you like it. Thanks for listening.
Long time.